There's no doubt that taking winners is probably the hardest trade, right? You know where you're going to get in. You can automatically set your protective stop. That's the easy part. But then what happens when you start making money? One of the most requested questions is this: where do I take my profits? How do I sit on my hands? How do I let my winners run? And I don't remember having a difficult time with this. Again, it was a different day and age. Stocks traded an eighth, so I wasn't a particular. I didn't want to be active because it was too expensive. So there's a few ways you can trail structure. You can trail by a percent stop. Normally, you're going to put in your protective stop based on whatever your R is, and that would be the percent of capital that you're willing to risk on any one particular trade. Let's just make up and say that it's a half a percent. So for every million you have, you're risking 5K. Now, what happens when the trade's up like 2K, right? If you're looking at your P&L, this is when you start to panic because you're like, man, I can't let this thing go back down to zero. For my temperament, and you might be able to benefit from this, I always look at those initial kind of green prints, if you will, as like we're just getting started. It's really the appetizer, or we're just getting even the bread. I've sat down, got the water. Someone asked me if I want a drink. I got my napkin folded on my lap, and now I'm ready to go. So I'm really thinking in the way I trade, where can I add more at this point? I'm not trying to say 2K. Now, you know my upbringing, right? I'm came from a working class background, so part of me still gets excited over $100 bill because I remember what it was like when I was a broke ass bitch. You know what I'm saying? So don't get me wrong. We're all still products of our environment, but these days I don't look at the dollar signs. I always translate it in my brain to think like, okay, if the ATR is a certain number, then and that's a half that's and I'm position sizing based on that number at a half percent. So then I know how many ticks I need to see in order to make a half a percent to my equity. So I come to the table with the anticipation of trying to make 1, 2, 3% on my capital on every trade. That's my mindset. So when we start making money and the thing goes green for me, I don't start to freak out because it's really just getting started. It's like saying to your parents when you were a kid in the long car rides, in long car rides that were 2 or 3 hours and you're 15, 30 minutes, into the trip, like how long till we get there? You got a long way to go. So I would condition your brain to start to think like, okay, it's showing me some profits, but it's nowhere near where I want it to be. So much so that the next order of business isn't even really to worry about taking profits. It's getting to the point where the price has moved away from your entry to the upside. You could be short and it can go down and you still have, upside in your account so that you can just basically move your protective stop to break even. And that doesn't mean sell anything. That doesn't mean sell anything and raise your thing. I'm just keeping the entire position that I have on because I don't have my optimal piece on when I get started. But I'm quickly looking to move that protective stop to break even. So for that piece of risk that I have on, I'm kind of free rolling. I'm just playing. I don't look at it as my money. I just say, okay, there's a bit of a cushion. That's kind of how I look at it. It's just cushion. And I don't get excited about it because I do know that, probably half the time you put on a trade, you're going to get stopped for the loss. Then another, I don't know, we'll make up the numbers. Another 25%, I'm going to put on a trade that it starts making me money. I'm going to raise the stop to break even. I'm going to get knocked out flat. That's part of life. I'm not trying to be right 9 times out of 10. I'm trying to get fully loaded so that on those instances when the thing really starts to move, I'll have enough risk on, never having really taken all that much risk at the beginning. So I'm kind of feeding into my position. Sometimes it's the same as my initial piece, sometimes it's smaller. If the chart ends up evolving the right way, sometimes I've doubled the position. After adding, I can remember in 0405 when I was first building into the sugar position when it was under 10, I had the account was like 50K. I had two on, one on. I added another two for five. And then when it broke out at 12, I bought another five. So I wasn't doing it uniformly, and I'm still kind of that way too. You have to kind of read the tape and see what the market's showing you. But the other thing that's important is like because one of the questions came in on the thing like, what do you do when you have a solid gain? So we have to operationally define that, right? I'm not a psychologist, and I don't know why the hell anyone would want to be one anyway. But you have to figure out what does that mean to you? Because a solid gain to you might mean something very, very different for me, right? Solid gain, does that mean it's in the upper half of all of your gains? I always like to think about it in terms of percentages because then you could be objective. The last thing you want to do is to start to think dollar signs. So I would say like solid gain. Well, what does that mean to you? And why is it that number? Why don't you make it higher? Like, so whatever you think of as a solid gain, why don't you double it? Make that the solid gain. Because it's all subjective anyway. Why would you limit yourself? The other thing is, like, the part of sitting on your hands is very, very easy because it's the act of not doing something. And you should be looking at the chart, not your P&L, right? Because once the thing starts moving, you can either trail by percent or you can trail by structure. Now, sometimes, like with the cocoa market, I've been scalping the past 2 weeks. You have to kind of look for the intraday structure because the ATR is like off the charts. It's up sixfold, right? From several months ago. It went from like 60 to 300, right? You know what I mean? So it's it's too volatile to price things based on ATR. So you have to think points. Then you have to think like, okay, where's the swing low? And if the thing keeps moving, so far so good. I guess I've been lucky because it's super volatile. Um, and I can remember speaking with one of my mentors about knowing when to take gains and thinking too short term, being a little bit myopic. And he was like, okay, so let me get this straight. Is your goal to make money or do you want to feel good? Right? Because I don't know why it's so painful for people to be in winners. And I wouldn't want to equate taking small gains with feeling good. I'd want to kind of blow that up and say, okay, I have unrealized gains. That's good. Once I have the unrealized gains, now I can turn that into a free trade because once the market's appreciated above my entry point enough, I can raise my protective stop to break even. And I'm just here to say, like, if you can set up your portfolio like that enough, who knows how much you could possibly make. You don't want to overthink things and be like, man, I got to take the trade. I don't want to take less than 500. I don't want to take less than 1,000. Whatever the number is for you, you have to think bigger. And if you're at that stage where, you've been taking several $100s, train your mind to start taking trades that have winners with a comma in it. It's up to you. You can make that determination. You can say, like, okay, I've been making whatever it was, 350 to 750 a trade. Now I'm going to trade and I'm only taking $1,000 winners. You can raise your protective stop when you're up 750 so that you stop out at plus 500. We've talked about this a million times. If you normally like to take winners at 3R, put your stop at 2R. See if it goes to 4R. If it goes to 4R, raise your stop to 3R, right? Because sometimes they'll go 5, 6R, 7R. And all you really have to do at that point is just keep adjusting your protective stop. The market will tell you when the move is over. There's really nothing to think about. So if your R is 50 ticks or 50 points, whatever it might be for whatever instrument you're looking at, your job at that point is to just continue to move your protective stop up as many times as you can. That should be the goal. Make a contest for yourself. How many times can I adjust my protective stop up? If I'm trading stocks and I'm scalping, 25 cents, okay, every 25 cents move, I'm going to raise my protective stops up 25, right? Some of you might want to do it mentally, but I typically don't advise on that because the markets can move too quickly and you can get smashed out. 2, I don't typically scale out of winners to lock in those gains. I'm much more of a position size kind of scalper where I'll nickel and dime my way in to get to the optimum size. And then if the thing moves, then I'm fully loaded. And then I typically adjust my protective stop for the entire piece. Because again, in futures, with the type of size that I can eventually get on, one tick can end up being quite a bit of money. So I feel like you can coach your brain to start thinking differently. It's really up to you. I don't want to get used to making less money and turning that into a good feeling because I can't take the pain of making money anymore. I have to get out of my winners, which is weird, right? Because traders that write me stay in their losers like no problem. They're like, yeah, I'm just going to wait for it to come back. But the minute they start making money, they're like, holy shit, Jesus, what do I got to do? I better check my social media, see what everyone else thinks about the name now that it's making up. Oh, there's a quote. Yeah, Cardano to the moon, baby. You got the fanboys. So take it easy on yourself and try to convert the points into percentages and then make it your game plan to adjust your protective stops up as many times as you possibly can. If you give the thing room to go, sometimes they'll really go. Think about how great you're going to feel if you've been normally taking off trades at 2R or 3R the first time you take off a 10R trade. You can do it. I know you can do it, but you just have to give yourself permission to stay in those trades. But Mike, it doesn't feel good. Remember when I said the feelings that you don't want to feel have as much power over you as the ones that do? Is your goal to feel good taking small bits of capital or go through some emotional development and make even more money? Because you're doing the damn work. You know how many times I've been in Coco what's today? So today's Friday. You're watching this Monday. It must have been Wednesday. I was scalping in Coco. I was adding, and I sat there, looking at the screen, which is not a great use of my time. But I must have canceled and replaced like 6 orders, adjusting my stop up. Edit the order, you click on the thing, you adjust your price, it says, re-enter. Boom, then it's done. Market turns back in my face. I did the best that I can do. Market continues to advance. Okay, I better adjust my protective stop. Go in, edit selection, change the price again, up whatever it was, 50 ticks, re-enter the order. That's the best you can do. I don't want to overthink about it and start looking like, oh my God, it's over X amount of dollars now. I better take that because I want that feel-good moment. I would much rather go home, and here's the takeaway before I shut up. I take solace in the fact that I can sit in and adjust my protective stops. That's the goal. The dollar sign, the market will determine. I'm not going to sit there and put judgment on what my P&L has. I'm going to judge myself and grade myself based on my behavior. I entered the order. I caught the swing low. I put in my protective stop in case I was wrong. That still happens, believe it or not. I'm wrong plenty of times. Starts to move in my favor, protective stop goes higher. Starts to move in my favor, I add a little bit more. Then I look at the average price, put in my protective stop accordingly. So ultimately, it's like if you're ready, willing, and able to risk like 5 ticks on the E-mini or 20 ticks on the MNQ or 100 ticks on Coco, it doesn't matter to me what it is. It's just that every time you see that incremental move, you can adjust your protective stops up accordingly. And if that's what you were willing to risk at the beginning of the trade, why would it be any different if you were up 5R? You can still risk that same amount of points. Chances are you're never going to top tick the market. I don't know why you'd want to do that, because that's where other buyers are. So again, I know some of you have very strong feelings about, scalping and swing trading and day trading or what have you, but I want to buy when there's other buyers, and I don't necessarily want to sell into strength. And I probably have more size than the rest of you. I like when there's more strength because that's wind in my sails. So think about that. I'm not calling your girlfriend ugly. I'm helping you try to make more money for the work that you're already doing. So I'm not the antagonist. I'm asking you to open your mind and to think differently. It's your emotions that are getting you out of these winning trades. The math is easy. So are the trading tactics. It's so easy. It's like easier than sending an email. Anyway, if you like this video, check out this one here.